in this context, I thought I'd just make three broad observations that I hope are relevant to the theme of investment and collaboration between Australia and Indonesia, particularly in the area of healthcare. My first observation is that the investment climate in Indonesia is, I think, very good and probably the best it's been since before the crisis of the late 1990s. And just one way of highlighting that is that last week the IMF released its most recent economic forecasts out to 2026. And for Indonesia, they show that the IMF expects growth in economic activity of 5.7% per annum over the 5 years to 2026. And what struck me is that's faster than China, for which the IMF is forecasting growth of 5.2%. And there aren't many economies in the world who can say that over a 5-year period, they're looking at faster growth than China. And given the change in relations between Australia and China in particular, and more broadly, the difficulties that now exist in China's relationships with a wide range of countries, the fact that our nearest neighbour is able to say it's expecting faster growth than China does really underscore the point that Pak Ivan made in his presentation there about Indonesia potentially being part of the solution to those countries and those businesses that are looking to reduce their reliance on China as a single source of supply. Just a couple of other things about the IMF forecasts that I think speak well to the macro investment environment in Indonesia. First, they're forecasting inflation of 3%, which by Indonesian standards is low and stable and consistent with BI's inflation target. They're also suggesting that public debt, which in Indonesia, like other countries, has risen as a result of what governments have had to do in order to deal with COVID, will nonetheless be 40% of GDP by the end of 2026. That's less than Australia, for which the forecast is 43. And the final point in those forecasts was that the IMF's expecting Indonesia's current account deficit to be an average of 1.75% of GDP over the 5-year period, which is again very low by Indonesian standards. It's lower than the growth rate. And all of these things, I think, point to the prospect of the rupiah being stable, which is an important consideration for foreign investors. And given how unstable the rupiah has been over the last 20 years, the prospect of an extended period of stability in the currency, I think, is very encouraging. And of course, that in turn partly reflects the confidence that Indonesia's fiscal and monetary authorities have gained by the way they've responded to the economic policy challenges that COVID has thrown up. So, as I say, my first point is that the broad macro investment climate for Indonesia is, I think, very favourable at this point.